Some say the bubble has burst, some say it's a stock market crash. Just how bad is the epic slide of Chinese stocks? In 3 weeks, the Shanghai composite has lost nearly a third of its value. To put it in perspective, some say this is even worse than the Greek economic meltdown, with the loss in value being 10 times more than the entire Greek GDP. The Chinese stock market is not like the New York Stock Exchange. The government has a huge amount of control over it all the time. It can only go up a certain amount and down a certain amount, but every day it's been bleeding value. So they've stopped IPOs, they've injected cash into the system to try and stop the slide, and they're saying that really there shouldn't be this panic sentiment in the market. But by even saying that, perhaps they're driving more panic. So what about the Chinese people? Well, individual investors have been hurt and hurt badly by this slide. Millions of them piled into the markets because of loosening regulation, allowing ordinary Chinese to borrow money to invest, so-called margin trading. They're going to be hurting really badly. But other than ordinary investors, the person who should be worrying the most, probably President Xi Jinping of China, because the government helped push the stock market rally, and now everything they're doing seems to be failing. And in the Communist Party, everything is about power and stability. Well, should you be panicking? Well, yes and no. Only about 1.5% of the value in the Chinese stocks is owned by foreigners because of the tight controls of foreign ownership in the Chinese stock. So there isn't this web effect. If the Chinese stock crashed, it doesn't necessarily affect the worldwide financial system like the Lehman Brothers collapse. But there is a sense that the sliding stock market is a symptom of an ailing Chinese economy. And with the world's second biggest economy, if China sneezes, the world definitely will catch a cold.